Hello, welcome to the European Open briefing for Tuesday, March the 20th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar is edging upwards, mainly against the Japanese yen, as treasury yields rise ahead of an expected rate hike by the Fed tomorrow. The Fed does start its meeting today. The euro was lifted yesterday by talk that the ECB is discussing when it will begin to raise rates in the Eurozone. Sterling also got a major bump up yesterday following the agreement between the UK and the EU of a Brexit transition deal, but we do still have quite a bit of risk of sentiment, and this is hurting the Australian and the New Zealand dollars. That risk off is mainly on those fears of a trade war following those tariff announcements by the US. So let's take a quick look at what's happening in the markets. We can see dollar yen is slightly higher on the day at around 106.20. Dollar index is also up this morning, though yesterday it was sharply down following those big gains by the pound and the euro. Both currencies are extending their gains early today. The commodity currencies, though, the Aussie and the Kiwi are lower, though the loonie has been able to firm slightly this morning following its more steeper losses we saw at the start of the week and last week as well. If we look at gold, gold is being pressured by that expectation that the Fed will raise rates this week, and that's benefiting treasury yields, which have negative impact traditionally on gold prices. If we look at stocks, though, it was a mixed bag in Asia. Yesterday we saw sharp losses on Wall Street, mainly on the back of sell-off in technology stocks, but in Europe, major indices are starting the day positive. Let's move on to the dollar now. We can see dollar yen did manage to move away from its lows we saw earlier in on Friday at the end of last week, where it was heading back towards those 16-month lows of 105.23. It has now managed to rebound from those lows, and as we head into the FOMC meeting, it's currently trading around 106.44 at the moment. The dollar index, though, has retreated significantly from last Friday's 2-week high of 90.38, mainly on the back of those big gains for euro and the pound. So both short-term and treasury yields have been heading higher over the past day, as the Fed is expected to raise rates tomorrow. It starts its meeting today, but still lingering in the background is those fears of new tariffs by President Trump. He's expected to announce on Friday that he wants to impose fresh tariffs on Chinese imports, mainly aimed at the telecommunications technology and intellectual property, amounting to $60 billion. That could potentially lead to an escalation to full-blown trade war between the US and China. We currently have the G20 meeting of finance ministers underway. They were hoping to agree on a text regarding free trade, but the US is pushing back on that. So all of that is weighing on the markets still, as we move to the other risk factors, risk events this week, being the Fed meeting, the Bank of England meeting. We also have an RBNZ meeting as well. But the euro, yesterday we can see did get a big lift upwards. There was reports by Reuters that ECB sources are saying that most governing council members have accepted that the QE by the ECB should end by the end of the year in December, and the discussions are now moving on to the timing of when the first rate hike should come, and there seems to be broad agreement that that should begin sometime in the second quarter of 2019. So the real debate now is as to how quickly rates should continue to go up beyond that. So that did boost the euro, though given the even the fact that every time the euro goes up and Mario Draghi talks it down again, we are seeing some caution in the markets this time around, with the euro trading around 1.2345, though we can see it has managed to move, climb above its 21 period exponential moving average. It had fallen to 2.5 week low 1.2256 yesterday. So later on today we're going to have the German Economic Sentiment Index, and Thursday we're going to have the flash Eurozone PMI. So those will be the highlight in terms of data for the Eurozone. If they disappoint, we could see the euro starting to drift back lower once again. Let's take a look at sterling now. We can see that big jump yesterday when it surged to a 1 month high 1.4087 versus the US dollar. We can see it's been steadily recovering from its 7-week lows we saw at the start of March. So yesterday the UK and the European Union reached an agreement on a post-Brexit transition deal. This means that UK business will maintain full access to the single market until the end of 2020, and also gives time for UK and EU negotiators to finalize a post-Brexit trade arrangement that would come into effect on January 2021. So the deal is expected to be approved by EU leaders at the EU summit on Thursday or Friday, and if that goes ahead, that would pave the way for the Bank of England to raise interest rates at its May meeting. We do have a Bank of England policy meeting on Thursday, so potentially we could see the Bank of England feeling confident enough to give that signal for a May rate hike, given the developments with the Brexit transition deal. But we also do have important data coming up this week. We've got inflation numbers due later today, labour market numbers, those are due tomorrow, and retail sales on Thursday. So those also will play a major role as to whether or not the Bank of England will signal a rate hike at Thursday's meeting, though for this month the Bank of England is not expected to make any changes to its policy. And let's take a quick look at the Australian and New Zealand dollars, because both currencies have come under pressure over the past week on those growing trade war fears. We're seeing those trade tensions hurting metal prices. It follows the announcement of tariffs on steel and aluminium, and given that Australia is a major exporter of resources of base metals, especially iron ore. It has particularly come under pressure over the past week, falling to 3-month low 0.7684 versus the dollar yesterday. We did see the release of the RBA's meeting minutes of the March policy meeting, though it didn't add anything new from what we saw in the statement after the announcement of that meeting, so there wasn't much response in the markets. The Aussie at the moment, though, has managed to rise just at the 0.77 handle, just off its lows of 0.7684. The Kiwi did see a bit more of a solid rebound. It did receive some support from the Westpac Consumer Confidence Index out of New Zealand for the first quarter, which showed a big increase from the prior quarter, though the Aussie did still fall to a 2.5-week low of 0.7194 yesterday. It's currently trading just above the 0.72 level. Coming up later this week on Thursday, we've got very important employment numbers out of Australia, as well as Reserve Bank of New Zealand policy meeting. And looking at the rest of today, we can see UK inflation will be the highlight of the European session, as well as the EU Economic Sentiment Index out of Germany. We're not expecting any major data out of the US. We're going to have Canadian wholesale trade, Eurozone Flash Consumer Confidence Index, and dairy prices, which will be important for the Kiwi. That's it from me. Thank you very much for watching, and have a great day.